This is the briefing for Thursday, April 4th. Tensions in the Middle East, tensions between Israel and Iran erupted this afternoon and certainly caused fear into the market and caused the market to sell off pretty substantially. And I think a lot of damage was done, at least in the short-term perspective and potentially in the intermediate-term time frame. And I'll get to that in just a second. These are 60-minute charts of the spiders and the Qs. Now, I did 60-minute charts. Normally I keep these on 15-minute charts, but I want to get a better picture of the rotational pattern that the market has been in for almost 2 weeks of trading. You can see this in the spiders, and you can see this in the Qs as well. Now, it was interesting. You can see the rotational pattern that occurred right here, right below 524 in the spiders, which was the upper resistance. Now, this is typical when you reach a support or resistance level. Typically, traders will stand back to see if there's enough strength in the market to drive price higher in this case, and they wait to see if the market will begin to trade through that level, and if so, then they'll start to pile in. And you get vertical development outside of a greater degree area of pause like this. So you get a breakout here and a breakout in this area as well. What happened was we got a breakdown, and the 522 level was broken. Now, I set up this trend line and this trend line based on the gap that we had this morning. So I wanted it to tell me in an alert that if we broke to the downside and this gap was going to get retraced, then potentially it was going to be a pretty good sell-off that was obviously rejected at this 524 level, and the potential for a test of the 516 level. As it turned out, in the spiders, and the same thing occurred in the Nasdaq in the Qs. As it turned out, we broke through 516 in the spiders, and we broke through the 441 level in the Qs, and then broke through the 438 level in the Qs. Now, we closed near the lows of the day. That suggests that if the market had not closed, we potentially would have traded lower. So it's going to be very important to see what happens in the first hour of trading tomorrow to see if there's a continuation and follow-through of the sell-off we saw that started this afternoon. Now, I want to point out one thing. You can see very clearly that volume in both the spiders and the Qs just exploded higher as this sell-off occurred. And this was a pretty substantial sell-off based on the fact that we've been really in small areas of rotation. I mean, this was a day's trading, this was a day's trading, this was a day's trading, this was a day's trading. So you get the idea that we really did not have very wide range days coming into today. And then you see that the range of today was not just the complete range of this area of rotation, but it broke through that area and is getting ready to test the 510 area in the spiders, which is a critical intermediate term time frame area, and 434 in the Qs. Now, you can see the volume, this is showing that volume fell off, but this is really the last 30 minutes of trading, so it's really not a full hour of trading based on this hourly chart. Now, the other thing I want to point out, and this is going to be important at the open tomorrow, is what happens with market breadth. Now, you can see this low here, and you can see where breadth is here. Then you go all the way back to here, where breadth is there, and you can see that low right there. So this is a divergence in breadth, which is suggesting that the market is stronger than it was at this low, even though we haven't traded down to the support level at 510 yet. The same thing occurred in the Qs with Nasdaq breadth. You can see that there's a divergence in breadth with a lower low in price and a higher low in market breadth in both of those. The same thing occurred in the Russell as well. So what's going to be interesting here is that because breadth declined throughout the day as this sell-off occurred, that it didn't have the opportunity to eliminate this divergence. It was declining as it should have during the day. So it's going to be very important if we get a lower low tomorrow. It's going to be important for breadth to be lower than it was in today's trading. Otherwise, it will signal that the market is stronger at this point than it was previously, and therefore you have to expect some type of rotation back to the upside. Now, this was a pretty big move in today's trading, as I've suggested, based on what the average true range was for the previous days, and the same thing with the Qs. Let's take a look real quick here at the Russell. So you can see the Russell is basically in the same situation, a little bit of a pause here, and then of course the sell-off trading through 205, which was an important intermediate term time frame, and now testing the 203 area as well. You can see the divergence in breadth that occurred there. So basically, and I want to be clear on the divergence in market breadth, is that had the market continued trading today, breadth likely would have continued falling off, and this divergence could have been eliminated. Therefore, if there's a continuation of a decline tomorrow at the open, breadth needs to be falling off or continuing to decline to eliminate that breadth, so we're not seeing an internal strength stronger than what we saw previously. So just watch what happens. The first hour of trading is going to be really important, but I think maybe right into the open, the first 15 to 30 minutes of trading, watching what happens with market breadth, because that's going to be critically important as at the open tomorrow. Volume certainly supported this move, and you can see that pretty clearly. Now, let's look at the longer term charts. This is daily chart on the spiders. You can see volume ticked up. It was trending along the lower average volume for each day. Really, the last couple days were just giving us no indication of an increase in volume, which is typical for an area of rotation like this. Now, this is the 516 area, 515 area. Next level of support is 510. Now, this is important because, as I've been discussing in these daily briefings, this is a series of higher highs and higher lows, which is the definition of a trend. It doesn't mean that this trend is ending, but what this does suggest is that we are potentially in the process of a greater degree time and price counter trend rotation to this trend, looking at this as a move higher or a run, and then this is beginning to be a greater degree time and price pause. That would be confirmed breaking 510. Now, the degree and extent of that counter trend rotation can only be analyzed as it develops, so we cannot project it, at least at this point in time. So watch what happens in the spiders at 510. Going to be very, very important. If that's broken, it breaks the last higher low, which would then suggest the higher possibility that we are in a greater degree time and price counter trend move, keeping in mind that we have a run, pause, run, pause, run, pause, and that this would be in a longer time frame, a run, and then a greater degree time and price pause. The same thing is occurring with the Qs. You can see the series of higher highs and higher lows, and then this pause, which has been going on for quite some time now, with a lower extreme right at the 434 area, which would be the lower extreme of this area of rotation. Breaking that would then open up trading down to about the 418 to 420 area, and that would break the last previous low. But breaking this lower extreme is going to be very, very important. You can see volume ticking up as well in the Qs. And in the Russell, breaking through 205, closing below 205, testing the low from yesterday. It's going to be very important. If that's broken, that's going to open up trading down to 200 in the Russell. And then that would break this previous low, or the lower extreme of this area of rotation once again. Now, in terms of overbought and oversold, you can see that this has to do with what happened with market breadth, because this indicator is a breadth-based indicator, is that we really are not at a point of being oversold or extremely oversold. We're basically neutral, mainly because breadth did not have a chance to sell off the way price did going into the close today. So once again, the open tomorrow and what happens with breadth, and I want to be clear here that breadth, the market may open and breadth may be at minus 862 in the NYSE, and continuing to decline, which would be perfect, or it could actually open down substantially, which would be fine as well. But if bread begins to climb on lower prices, then that would give you a signal the market is strengthening internally, and you have to expect some type of counter trend rotation back up to correct this move right here. Going to be a very interesting close to the week. Have a great night, and I'll definitely pick this up on tomorrow evening. The days like this lead me to believe I need to have some type of a short-term alert system that I can send out to traders that are subscribers, and I'm going to begin looking into that, because as this developed today, there were a lot of alerts that I could have sent out that could have helped potentially even with day traders and with swing traders as well. Have a great night.